No one wakes up in the morning and says, I'm going to do a reverse mortgage today. I'm sure there have been people who've done or said that, but most people do this to solve for something. Paying for
Right.
care, don't have enough money put aside.
Janice Cohen, welcome to my podcast. I'm just saying, tell me a little bit about yourself.
Well, I am, first of all, happy to be here and thank you for inviting me, Robbyn. I am a relative newcomer to Southern California. I've been here for 16 years. I moved out here with my husband. He was transferred within Warner Brothers, and we are here in Burbank. And I
Oh,
feel
you're
so
really
lucky.
local. You're like around the corner from me. I was in Burbank yesterday.
I am. I love Burbank.
Yeah.
I'm like
Do
the
you?
biggest cheerleader for Burbank now. Yeah.
That's not, you know what I saw? I don't usually stop in Burbank. I usually am passing through, but I was driving through Toluca Lake because I didn't want to get on the 101 freeway yesterday. And Toluca Lake is just darling. I just
It
consider
is.
that part of Burbank. I mean, I know
Uh,
it's not, and people probably get, oh no, we're Toluca Lake, but it's darling,
It is. They
you
have a
know?
Gelson's now.
They do it. It's like right on, what was I on? I was on Riverside, I think. Riverside
Yes.
or Moore Park, one or the other. And I'm like, oh, look at how cute all these little shops. It's all trendy. I mean, if you blink, you miss Toluca Lake.
Yes.
You know, and you
Uh,
pay a lot of money to live in Toluca Lake too. Prices are
yeah.
high there. Yeah, but
The,
that's
the
okay.
and everyone who lives in North Hollywood-ish is always like, I'm in
Yes.
Toluca Lake. And it's like, really?
No, 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 no. You know, if you're not in Toluca Lake, you know you're in Toluca Lake. You're not in Toluca Lake if you're in North Hollywood. No, not at all. So tell me a little bit about, I'm trying to mute my phone, so give me one second. Because everyone will beep me and everybody will call and it won't be a good thing. All right. I think I did that. All right. There we go. Reverse mortgages. Is that all you do is reverse mortgages?
That's it. That
That's
I
it?
am an exclusive reverse mortgage advisor.
What does that mean?
So, to give you a little bit of background, I started my career at Wells Fargo 21 years ago. And when I got there, pardon me, I was hired for the reverse mortgage division. I had no mortgage experience at all. I was a teacher and I was making this career change, which now that I think back on it, I must have been insane. It was really going out on a limb. But I got to Wells Fargo and I saw that there were renovation mortgage specialists, there were reverse mortgage specialists, that there were purchase specialists, refi specialists, and there were uh, those who were specializing in people with credit problems. But I was hired for reverse, and I haven't looked back. I was very, very motivated. I was a single mom. I was very motivated from the start to make this work. And I've been a top producer pretty much since my second year of being a reverse mortgage advisor. I would try to learn as much as I could and bring as much value as I could. I mean, this was in 2005. So I had to figure out strategies to really be successful and to draw people to me. It was very challenging.
I would think, based on what I know about reverse mortgages, because of the counseling that takes place and all and the steps that they have to go through in order to get this reverse mortgage, that being a teacher played a really relevant role in you being good at what you're doing.
Exact. And that I would say that's exactly right, because people don't need to be sold on this. They need to understand it. So they need someone who's going to sit down with them and explain it in a way that makes them feel comfortable. And then they're ready to move on to the first step.
What do you think prevents people from doing reverse mortgages? And I'm going to do a part two to that, especially when It's always seniors. Seniors are reverse mortgage clientele
Correct.
because they don't want to leave their home. But there's this, there's that word out there, oh, that's just a con job. You're going to lose your house to that. My mom had a reverse mortgage, so I can state emphatically that it's not a con job, and it was probably one of the best things that she did. And so what are you doing to keep people from saying, oh, that's just a con job, you're going to lose your house? And what is it a senior would need to know specifically when they're telling their family, this is what I'm going to do, so that the family goes, okay, I understand. I understand why mom's doing this. Because mom doesn't want to have to go. Where's mom going to go if
Well,
she
that's
can't
it.
access the equity in her house?
So, two things. Number one, who's doing a reverse mortgage? It's generally people who want to stay in their home and either they need to pay for care, which is very expensive, number one, or number two, they either are young-ish and do not have enough money set aside for a healthy retirement here in Southern California, which is such an expensive undertaking. That's what's going to trigger them. There has to be a pain point. No one wakes up in the morning and says, ah, I'm going to do a reverse mortgage today. I'm sure there have been people who've done or said that, but most people do this to solve for something, paying for
Right.
care, don't have enough money put aside. And I will say this, in the past 15 years, I have seen a vast improvement in the reputation of a reverse mortgage, and I'll tell you why. And first, let me say that there are fewer and fewer people calling me and saying, I know the bank's going to take my home. Obviously, not true. Number
Right.
two, a reverse mortgage is a con job. I don't really hear those things anymore. So now I'll tell you why. About 15 years ago, it was actually 2013, the whole reverse mortgage was holistically improved upon. When I say that, what I mean is that we instituted financial assessment for our borrowers. So it used to be that if you could fog a mirror, if you had a pulse, we would lend you money. And so as of 2013, we our borrowers in a different way based on their income, based on their history of making payments on time or not making payments on time. And we evaluated people as either a strong candidate or a weak candidate. So a strong candidate would be someone who comes to me, has a healthy Social Security monthly income, not like $800 a month, but maybe, if they have obviously they're going to have expenses, someone who's making a couple of $1,000s a month. It doesn't have to be outrageously robust, but
Right.
someone who has healthy Social Security income. So once we look at that person's history of making their property tax payments, their homeowners insurance payments, their mortgage payments on time, we're good to go. But what if
Okay.
someone comes to us and they haven't been making, excuse me, payments on time? We have a solution that we didn't have earlier. The solution is we're going to set up an impound account. Now you might say, well, of course, a lot of people have impound accounts when they purchase their homes. There's nothing unusual about having an impound account. But with a reverse mortgage, it is an innovation in reverse mortgages, and it works differently than it does for forward mortgages, because for forward mortgages, you're making a monthly payment. So you're going to make the payment and you'll add whatever extra the lender or the servicer is telling you need to add.
And it's piece by piece as opposed to all at once.
Correct. So we are going to, for a traditional mortgage, we're going to calculate, and every year the payment's going to be a little different based on, oh, the taxes have gone up and the insurance has gone up, etc. So for a reverse mortgage, we look at what the borrower can borrow. Let's say they can borrow $500,000. And let's say they're in their 70s, and let's say we have to calculate out till they're age 100. We might say, okay, we're going to set aside $40,000 for this impound account. So we're going to set aside from that 500,000 that you can borrow, $40,000 in what will be used to pay your property taxes and homeowners insurance. And then we're going to give you a line of credit, not a 500,000, but a 460,000. So we're
Right.
going to use some of the reverse mortgage proceeds to compensate and to be able to make those payments on behalf of our borrower.
So one way or the other, I mean, insurance and home and property all have to be paid. So you're guaranteed that the house stays current because that's
Yes.
a condition of your reverse mortgage is you have to pay your homeowner's insurance, you have to pay your property taxes, just like any loan.
What has happened anecdotally due to our underwriting of borrowers and our decision in some cases to do an impound account, which is otherwise known in reverse mortgage world as a life expectancy set aside. And we call
That's a
it a,
very nice word for it. That's really nice
yes.
because
So
it could
we,
certainly be called something else.
yes. And
Yeah.
we call it a Lisa, which is even
Oh, that's nice.
nicer than a life
That's I
expectancy set
know,
aside.
it's better than a Karen, right? So there you go.
Exactly. What I would say is that anecdotally, or as a result of the underwriting that we have instituted, what has happened is that we have no or far, far fewer foreclosures. Not that we were having a whole ton of foreclosures,
Right.
we weren't, but the fear is always what happens if our borrower, and this was something that began at Wells Fargo, where we had a very large portfolio of reverse mortgage servicing. What happens if this 85-year-old lady can't pay her taxes?
Yeah.
We can't, you reputationally
Wells
speaking,
Fargo doesn't want that on their record.
they don't want to be on the
Yeah,
6 o'clock news escorting Mrs. Smith of
out of her
85 years
home.
old out of her home. Exactly.
100%.
So it's very good, I think, that we found a way to make this work. And I'll tell you, Robbyn, it's interesting. I would say in 2007, 8, 9, and 10, I was closing over 100 loans a year. I dropped down once this program began, where we were instituting financial assessment. I would say I went to 3/4. My audience shrunk significantly because we also reduced the amount of money that we could lend.
Oh, okay.
Also as a way of making the reverse mortgage more sustainable.
So what's the difference between, is this guidelines across the board for reverse mortgages? It's
They're
not just a
federal.
Wells Fargo requirement. That's how all of the reverse mortgages are now working.
And I, by the way, I work for Mutual of Omaha now. I went from Wells Fargo to MetLife, and I've been with Mutual of Omaha now for 11 years.
Oh, nice. Okay.
Yeah, the last company where I was before Mutual of Omaha was acquired by Mutual of Omaha, and it was just fantastic news for us. And we
Oh,
love having
nice.
that name
Yeah.
and the
Well, because
reputation.
especially that's an older name. So people recognize it, so they trust it. Very
I
nice.
grew up watching Mutual of
Mutual of
Omaha's
the
Wild
Wild
Kingdom.
Kingdom. Yeah.
Yeah,
I every Sunday night, that's what we were allowed to watch before we went to bed for the next school week. It was
yes.
like a treat, you know, and it's like not now. There were no screens. That's what you watched.
It reduced the Sunday scaries, right? Because every
It
Sunday night I'd be
did.
like, oh my gosh,
Yeah.
do I have all my
It's
homework ready? What am I going to be
right.
dealing with tomorrow? And it's like,
Yeah,
oh, let's
exactly.
just watch
Exactly.
Mutual of Omaha and Wonderful World of Disney.
Yes, 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 exactly, exactly. The old times. So how do you get I'm trying to, I think I sort of asked you this, but when you're doing these reverse mortgages, there was something interesting that I was told the other day that you can do a purchase reverse mortgage.
You can. You
Do you
can do
do a
a
lot of
purchase.
those?
To give you an example, let's say you have a client in Pasadena that's selling a $2 million home.
Right.
And so let's assume they're paying off a mortgage, they're paying their closing, everything that it's going to cost to get out of the home, maybe some long-term capital gains taxes. Let's say they have a lump sum at the end of the day of about 1,500,000. And let's say they want to buy a new house. And let's say that they really want to have $1 million to give to a financial planner to say, make this my income indefinitely for as long as it lasts. And let's say they decide, we're going to take this $500,000. Robbyn, find us a house in Monrovia or find us a house wherever, the desert. And you'll say, I'm not going to be able to find something that you're going to love for $500,000. And in your heart, and because you've already checked, they're not going to qualify for a sizable mortgage because all
Right.
they have is their Social Security. What we can do is we can say, okay, Mr. and Mrs. Jones, you're going to put down 500,000. We will finance the balance of the purchase of a $1 million home, and you will have a reverse mortgage on that home, upon which you will have no payments required. You'll have to pay your property taxes and homeowners insurance and HOA fees. But other than that, you have no payments to make. So you will be in a position of living in a $1 million home and living as though you purchased your home for cash, which you
So
didn't.
what's
You have
well,
a
so
mortgage on it.
what's interesting though is so they sold for 2 million. They put $1 million in savings
Hmm.
that they're going to have their money manager work for them. They
Hmm.
took $500,000 cash and bought $1 million home and have no house payment. So they've got income off their million. They invested their five. They still hold an equity position in their new home that they bought, and they have no payment.
Exactly.
And do they also get to take their Prop 13 tax base with them so their taxes stay low?
They certainly
So,
do.
so in essence, they've accomplished multiple things. They have a house they can live in that they love. They have the same taxes. They have money in the bank. They have equity in their house and they have no payment.
It's a
So
beautiful thing.
it's a beautiful thing because that $500,000 that you reverse to them is, I mean, how, there's no income on it. I mean, there's no payment on it. They're not even going to notice it. I mean,
Right.
and if you have the Lisa calculation, love that, the Lisa calculation on it, then I mean, if their life expectancy is, another 20 years, they're probably not going to eat up that $500,000. And they've nest egged so much of their equity when they sold their big house. So
Mhm.
there's still money left to the heirs or if someone passes away. So they really are, I mean, I think it's a wonderful thing, quite
It's such
honestly.
a win. It is such a win
Yeah.
because I visit seniors who are not selling, who are staying in their house, their big house in San Marino or Pasadena, and they've moved their bed downstairs. They
Mhm.
haven't even been upstairs in years because they can't get there. I'm sure you've seen that many times.
It's fascinating to me. And I really have to think that it's this emotional attachment that they have to their home. And they're just not ready to give that up yet. And
Or
so they'll accommodate because they worry, because if they sell it, they're still going to have a gain on taxes. And why are they going to pay all those taxes if they sell when they can make a bedroom downstairs and be in their big house? I mean, if we could get a better tax break for them to sell their big houses, more people, I think that more seniors would sell their houses if they weren't going to have such a huge tax implication.
I, you're singing my song. I only wish that the exclusion would increase from 250,000 per person to 500,000 per
I
person.
think it needs to be higher with the prices of real estate, if you really think about it. And I know there's been some rumblings about doing that because when's the last time they raised that?
It's been
That's
since
like,
the 80s.
I mean, since they initiated Prop 13, and I'm thinking the amount of movement you would have in these bigger homes or just in real estate in general. If you raise that, I think there's a bit of a myopic, oh my gosh, we can't give them a bigger tax break. But if you get 10 more homes moving, that's 10 more sales, that's 10 more new home buyers that pay the higher tax rate. It it just exponentially gets you collecting more taxes than from making Fran stay in her 12,000 square foot house that you'd have a tax bill of probably $60,000 a year on.
Yeah.
I don't
It's
know.
terrible. And I see so many seniors living in homes that are no longer appropriate for them.
Yes.
Homes where usually designed like in the 70s, where to get from the living room to the dining room, you have to go up 3 steps. It's
Oh,
not
right. That
safe.
old traditional up and down floor plan. Yes, exactly.
It's not safe.
No,
And
it's not safe. And then on top of that, we're not even touching on the maintenance that they have for their big house.
yep,
And with heating bills and electric bills and water bills. I mean, I have clients that are moving because they can't afford their utility bills anymore.
I
That's
believe it.
sad.
And their homeowners insurance, if they're on the
Yeah.
California Fair Plan, if they're in a brush zone, it's terrible.
Yeah.
Just awful.
So if they want to stay, I think what people are missing is that you've got this product because nobody talks about the reverse purchase. You hear about the reverse mortgage, but you don't hear about the reverse purchase.
And I'll tell you why, Robin. I think part of the reason that it's not discussed very much here in LA County is because to buy a home, let's say in Monrovia or
Yeah.
Arcadia, these are very expensive homes,
Yeah.
and they may or may not be suitable to be a forever home. People who are knocking down those homes in Arcadia,
Yeah.
little homes, usually one story. A senior passes away, the house gets sold, they tear down that house and they build a much, much larger two-story
Oh,
home
yeah.
for families.
Yeah. Yeah.
These areas of the city are trying to attract families. They have excellent schools, and there's really no reason to not try to attract families. Whereas if I do most of my reverse purchase in La Quinta, Palm
I was gonna
Springs,
say
Palm
probably the
Desert,
desert.
yeah,
Yeah.
pe-
Probably in the desert.
people are
And if we
leaving
ha-
here and going to the desert.
and if we had builders that could get some land and start building, I'm going to say tiny homes, but not tiny homes, you would have seniors buying those left and right.
Like patio homes, like they have
Yeah,
it.
patio
I have a
homes. That
colleague in
exactly.
Ohio, and they have patio homes. You have a
Yeah,
tiny little square of property, and you have 2 bedrooms. Maybe you
yeah,
have a loft, but it's like a 1,200 square foot house. I would do that all day long for me
right.
personally.
Yeah, and I just think that, it costs so much money, but in so much of everything that's being built right now is all of this affordable housing that who's going to sell their beautiful home in San Marino, Arcadia, Burbank, any of these neighborhoods. And it could be, even if it's not this beautiful, gorgeous San Marino 12,000 square foot home, but who's going to legitimately sell their 2,000 square foot home that they owe nothing on, that they've loved to death, and move into a 700 square foot apartment? They're not going to do
With
it.
low ceilings and
Yeah, and I'm
no.
now I'm surrounded by, all these, I'm gonna say young families, but why are you going to go back into that lifestyle when
Right.
you're at a different place in your life? And it's like, I don't understand why. I know the land is expensive. I get that. But I have in my brain, you're gonna laugh at me. So a lot of my business is seniors. And I swore to myself one day I was gonna build senior land. And it would be like Disneyland, but for seniors. And it
I
would
love that.
and
I
it
would
would
partner
just
with you on that,
would you partner
Robbyn.
with me? I'm gonna put it out there into the universe that we need to build senior land. And I don't mean like down in like I have a friend that I sold her house and she's down in Laguna Hills in that area. And she loves it. And it's older and they've got all these different models. And I mean it's really old, but it's got all the golf courses. I don't think we need the golf courses and all of that.
Mm-mm.
But what we do need is new homes where seniors don't have to worry about maintenance, where they're not real big. You can build. There's this ad I see on Facebook all the time where this lady says she bought this plot of land and she built all these tiny homes just for senior women. And I
Yep.
don't know, it's probably AI generated, but I look at that and I think that's such a brilliant idea
Well,
because
it is a brilliant idea. So what I was noticing, I just did a reverse mortgage for a couple up in Santa Clarita. I can't remember the builder. Might be Toll Brothers.
they have some senior over 55 communities up there. One of my clients, I think they bought, I want to, they got a beautiful patio home. She bought the model, and I want to say it was like in the fives. I could be wrong about, no. I'm totally wrong on price. I think it was in the nines. But we sold her house or duplex, and they took that money and they put it into this new home. And it's brand new. It's one story. It's beautiful.
Yeah. I'm trying to remember what the name of, yeah, I think Santa Clarita has,
Mhm.
it's called Tesoro, and it is
Yes.
built by Lennar,
Yes.
and they're
And
lovely.
they're wonderful, and but it's you then you go, okay, but do I want to live in Santa Clarita? There's nothing anywhere when you come back down into the valley. And when I say the valley, I'm talking Burbank, La Crescenta, Pasadena. Pasadena doesn't even have much for sale. They have Montecedro, which
Mhm.
is a nice big new development. I have clients that are moving into that. And but as far as anything else, it's like I look at all of these new laws that they have in place where you can split up these lots now, and if you have, I think there's a new one that's if you have an acre, you can build 10 tiny homes on it. And I'm thinking I think we all kind of have this knee jerk of, oh my gosh, there goes the neighborhood. But then I thought, but if you have a developer come in and they do 10 tiny homes for seniors, I'm like, well, I mean, it's not like they're having wild parties and driving crazy through the neighborhood.
No,
You know?
they're pretty good
So,
neighbors. I
I
love
mean,
that.
they're probably pretty darn good neighbors. So, I don't know. I just think there's other options, and I think that you would have more business if you had more places for people to go on the reverse purchase.
On the reverse purchase, it's true. Although I will say, I do, I wanted to add actually that if you were, I've heard people talk about buying Altadena lots and building communities there.
Yeah. It's pricey though. That's the thing. You're
It
not,
is.
those lots are not cheap up there.
No, they're not.
And if you're trying to build something affordable, you're
Mm,
not buying, I mean, I see all those rebuilds up there, and they're not five and $600,000 homes. They're $1 million plus homes they're building.
yeah. Yeah.
So tell me how many reverse mortgages are you actually doing now?
I first of all 100% of my business is referral. I don't
Okay.
advertise. I
Yeah.
don't buy leads. My company doesn't give me leads. All of my business is self-sourced. So in the first quarter of 2026, I closed 10 loans. My prediction is that by the end of the year, I will have closed between 40 and 50 loans.
That's a lot.
It
That's
is a
a good
lot.
amount of business on. And so are you finding that the clientele has kind of exasperated? I could move, I could sell, they've kind of done. What's that conversation that drives them into, I think this is the better option for me?
Well, it's funny you're asking this question because I just had a conversation today with a daughter of the mom. This is a second marriage. Let's call them Joe and Nancy.
Sure.
Nancy's daughter calls me. Joe's children say, sell the house, move into Belmont Village. And they want Joe and Nancy to move in together to Belmont Village. Joe has a terminal illness. He's in his mid 90s and he's having a lot of health struggles. He needs round the clock care, really. And they want to, rather than, and he has long-term care insurance, which
Good
is
for
great,
him.
but they still
Yeah.
need to supplement the long-term care insurance with proceeds from the loan. So his kids are saying no loan, and the daughter of what did I say her name would be? Joe and
Joe
anyway,
and I don't remember.
I don't remember.
Let's call her Lucy now. Lucy, she changed her
Lucy,
name.
Lucy and
Lucy.
Ricky. So we're talking
There
about
you
Lucy and
go.
Ricky. So Lucy's daughter says, no way. Lucy's daughter is saying, let's do the reverse. Let's keep Joe at home for the rest of his life, which might be about a year. And then,
Right.
I mean, the home is Joe's separate property, sole and separate property in his trust. And when Joe passes away, which inevitably you're in your late 90s, it's going to happen. Although I have had several clients in their hundreds, believe it or not.
Wow.
But let the house get sold at that point. It's a very good solution, but Joe's kids are against it, and Lucy's daughter says, let's do it. I don't want to see my mom displaced, but it has to be a conversation. Some people involve their children, some do not.
So what's the reason that the kids want it sold?
They don't want to lose any of the equity that they have in the house. So right now it's a $1.6 million house. There's a
Right.
$600,000 mortgage. So they have $1 million in equity.
Oh,
When you,
okay.
if we pay off that if we pay off that existing mortgage, give him $10,000 a month. So
Right.
he will be charged interest on the money that's been borrowed, and we're giving him 10,000 additional every month. So he will have
Right.
a growing loan balance.
But if he's got a $600,000 mortgage, I can't imagine that the interest paying on the reverse is more than what his mortgage payment is.
Well, the reverse mortgage would extinguish that first mortgage, pay that off.
But if you pay that off and now he's let's say that Ricky's got another year and he's getting $10,000 a month. So there's 120,000 and now you put the interest on top of that. So let's just call it another 100,000. I'm sure it's not that much, but now there's 220. So Ricky gets to stay at home for $220,000
But
versus
also remember, it's a negatively amortizing loan. So we've paid off the 600. So
right.
600 is going to start to grow. Plus now we're giving 10,000 a month. They don't want to see the equity get eaten into at all.
But it's good. But here's what they're missing is my initial reaction is, okay, so you're gonna sell the house before Ricky passes. So you're gonna move Ricky. They're gonna buy a new house or they're not gonna buy anything.
No, he's going to go into Belmont Village.
So you're gonna have Ricky have all these tax consequences by selling this $1.6 million house. So by the time I even do that quick math in my head, the kids get more money if Ricky stays there with the reverse mortgage,
Agreed.
because that's really what that's about.
Yeah, because he'll have to pay long-term capital gains taxes on that
Well,
sale.
he's got that. And now what's it going to cost him to be over in Belmont Village?
It's going to be a
That's
lot.
not cheap.
No.
It's
And
the
this is a second marriage, and Lucy is saying, I'm not moving to Belmont Village. I'm going to move in with my daughter. You can send your father to Belmont Village. I will
right, and
visit
you
him
can take
every
care of him
day.
over there.
I
Yeah.
will visit him every day, but I'm not going because the children also want Lucy to pay for 50% of the rent in Belmont Village.
Oh, this is wrong on somebody's not doing the math.
Right.
Like if you actually went and had escrow do a net sheet on here's your sale, and the CPA
Mhm.
gets in there and says, and here's your taxes.
Here's the thing, Robbyn, they're all lawyers. Lucy's daughter is a lawyer, and Ricky's children are both lawyers too.
But that doesn't make them real estate
I
savvy.
know, I
It
know.
doesn't make them smart.
But it makes them argumentative and adversarial
Yeah,
and digging in their heels.
but is there question that they just don't want Lucy to have Ricky's property? Is that it?
Well, she's not going to have Ricky's
She's not
property.
going to have it regardless. So why not have Ricky use his money to take care of Ricky and use it in the equity of their house?
I agree.
That's such an expensive move.
I'm in contact only with Lucy's daughter, not
Right,
with Ricky's children. They're on
right.
the other side. They don't even want to have a conversation with me.
But I
So these
think that
families,
if But I think that if Lucy had a net sheet of like, look at here's if we do it your way, here's if we
mhm,
do it my way, here's the
mhm,
net result. Because at the end of the day, they have a property that got paid off that big giant mortgage. There's still a revert, but they will still have a property to sell
mhm.
after Ricky passes and not have all those tax implications. It's a very, it's not a, I hope they're better attorneys at whatever they do
I hope so too.
versus yeah, I mean, you just have to look at the numbers there. That's tough because you're trying to be
And
smart
Lucy's
about things.
daughter is a very good attorney, and I've known her for many years.
Yeah. And it doesn't make sense. I can't, why would they want Lucy to go live in a home where she doesn't need to live and pay that crazy because what is that? Probably $12,000 a month?
Yeah, but they don't care about Lucy's financial standing. They only care about, I don't know. They only
Huh.
care about their bottom line,
That's
I
sad.
think.
That's sad to watch. So when people do these reverse mortgages, what are most of them once they're done, are they happy they did it?
Oh, yes. Absolutely. Absolutely.
What's the biggest fear of doing it? What makes people go, I don't know if this is right? Like what actually holds those that actually do it? What was the stumbling block for them?
Is this really going to be my final home? Because I strongly urge people to do this in their final home, where they want to live for the rest of their lives. I would never want to see somebody who lives in a 3-story townhouse and they're 75 years old and there's no way to put in an elevator. Not a great application of the reverse mortgage, but they have a single-story home in Westlake Village or in Encino. Great. Let's do it all day long.
So you want to see everything fit, not just, okay, do the numbers work? It's like, does it make sense for you to stay here? Is this the best place? Because a lot of times on those reverse mortgages, do they still make you do, if there's any deferred maintenance, do they make you do some of that deferred maintenance?
At the time of application, we do an appraisal,
Okay.
and the appraiser looks for health and safety issues with the house. A broken window, a leak in a ceiling of unknown origin, a tree that's getting ready to fall onto the house, whatever the case may be, those need to be addressed. A roof that clearly is at the end of its life. I had recently a house in North Hollywood owned by two sisters, a lot of deferred maintenance. I was able to get them a contractor who we paid on the HUD.
Oh,
We still
okay.
use a HUD. We don't use
Okay.
trade. And at the time that they did the repairs, at the same time that they did the repairs, they were getting letters from State Farm saying, you need a new roof. We've flown
Thrown over your
a drone
house.
over your house.
Yeah.
We know you need a new roof. And it's only a matter of when we're going to come back and demand we're going to withdraw our insurance and we're going to make sure that you get a new roof. So with part of the proceeds of the reverse mortgage, they are now putting a new roof on the house. But they had a lot of
Okay.
work to do even before that. And the initial appraiser did not call out the roof. It was State Farm that
Oh.
called it out.
Wow. Yeah, they're getting insurance companies. I know that my insurance company came and flew the drone over my house, and I was like, "Ha ha, my roof is 3 years old." So I was okay with that. But you see all that, and that I think is that a concern of a lot of seniors where they know their house is in disrepair and they're like, how am I going to be able to afford to fix it?
Absolutely, especially when you think about the fact that a home is your biggest asset for most people,
Right.
especially in Southern California. Even if they
Yeah.
put away a lot of money. I have a client in Beverly Hills. I just closed her loan. She bought her house in the 1970s for $200,000.
Oh, wow.
Her house appraised for 9.1 million.
What?
Yes, it's a
Seriously.
beautiful, huge house. And it needed some updating, but what house wouldn't need a lot of updating? All of our homes really require maintenance. My home is a
Right.
money pit. I'm sure, not really, but homes are
Right.
money pits.
You have to. I think the thing is people wait too long to
Yeah,
do those improvements, and then they become major repairs. Instead of
right.
going, "Oh, okay, I'm gonna go fix the grout today," or "Let me have the handyman come over and do a couple things," and then it snowballs so fast.
It
I
really
don't think that
does.
people and water, people don't understand the destruction that water does.
Water. Mold. You're talking
Yes.
about potentially electricity
Yeah.
problems from
Yeah.
water. You could have
Yeah.
a fire that starts because water got into electricity. It's
Yeah.
terrible. It's very
Yeah,
dangerous.
and especially the exterior, I finally put gutters on my house. Probably the best thing I ever did. You don't understand how I know we don't get a lot of rain and people think that's just crazy. Why do I need these? But the amount of water that collects around your foundation when you don't have gutters can do so much damage. There you go. If someone is
Absolutely.
interested in getting in touch with you and doing a reverse mortgage or just walking through like is it really the right thing for me? How does one get in touch with you?
So my phone number, I have a toll-free number. It is 888-740-9566. And to get to my website, which is a Mutual of Omaha website, just type in amerimortgage.org. And that is
Okay.
me.
Perfect. Oh, nice. This has been delightful. I love that we solved all of the housing issues for our seniors, and now they know how to get money and stay in their houses. And I think it's great information. It's enough not to be overwhelming.
Yes,
And I
it,
hope that people reach out to you because I do think for a lot of people, especially today, I think it's a really good option.
I do too.
So thanks
Absolutely.
for
For a
doing
lot of
that.
people.
It's a
Thank
good
you.
thing. And good people are doing reverse mortgages now. It used to be the snake oil salesman, I think, kind of
Yes,
attitude. But I've had several conversations with people that do reverse mortgages. And the fact that my mom did it, I think it makes it an easier conversation for me to have. And I think the thing that people don't realize, there's a lot of counseling that goes on in order for you to do a reverse mortgage. So it's not like you sit down at one signing and it's like, oh, we've done the appraisal, you're done. There's way more to that.
there's a lot, a
Yeah.
lot.
Yeah. Thank you so much for being on my podcast.
Thank you, Robin. It's been such a pleasure.
I appreciate that. I'll talk to you soon.
All right.
Bye.
Bye-bye.
Thanks.
I'm Robin Battles, and I'm just saying, I want to thank you for listening. I hope you'll come back for future episodes and be sure to like, share, and follow. I'm just saying, let's get to the point. I'm Robin Battles.